The most powerful banks on earth were not built in peace, they were born in desperation, on battlefields, in blood, and in war. Long before credit cards, stock markets, or central banks existed, rulers faced a deadly question. How do you pay for war when you've run out of gold? The answer didn't just fund armies. It created modern banking itself. From medieval kings begging merchants for loans, to empires financed by debt, to wars so expensive they reshaped money and power forever, conflict became the engine of financial innovation. Today, we uncover the hidden truth behind the global banking system, how violence forged finance, how war built institutions, and how the need to fight created the financial powers that now rule the world. Welcome to the Epic Economics, where money, power, and history come together. Let's go back to medieval Europe, around the 12th and 13th centuries. Imagine you're a king. You have a kingdom, you have an army, and you have enemies. Maybe it's a neighboring kingdom trying to invade your land, or maybe you want to expand your territory. Either way, you need to fight a war. But here's the problem. War is incredibly expensive. You need to pay thousands of soldiers, buy weapons, armor, horses, food supplies, and build siege equipment. Where do you get all this money? You can tax your people, but that takes time and makes them angry. You can seize property, but that creates internal enemies. You can't just print money because paper currency doesn't exist yet. Gold and silver coins are the only real money, and you don't have enough of them. So what do? You borrow. But from whom? This is where the story of modern banking begins. In medieval Italy, specifically in cities like Florence, Venice, and Genoa, a new class of people emerged, merchant bankers. These were not just traders, they were financial innovators. Families like the Medici in Florence, the Fuggers in Germany, and Jewish moneylenders across Europe realized something crucial. Kings need money desperately during wartime, and they're willing to pay high interest for it. These early bankers started lending money to kings and nobles, but it was risky business. If the king won the war, he might pay you back with interest, making you incredibly wealthy. But if the king lost the war, or simply decided not to pay, you lost everything. Many early bankers went bankrupt because kings defaulted on their debts. Some were even executed for demanding repayment. Yet despite the risks, the business of war financing became the foundation of modern banking. Let's focus on one family that perfected this system, the Medici family of Florence. In the 14th and 15th centuries, the Medici Bank became the most powerful financial institution in Europe. How did they do it? They started by becoming the official bankers of the Pope. The Catholic Church was not just a religious institution, it was a political and military power. Popes fought wars against rival cities, heretics, and Muslim forces. They needed enormous amounts of money, and the Medici provided it. But the Medici were smart. They didn't just lend money. They created a sophisticated network of branches across Europe. They invented double-entry bookkeeping, which is the foundation of modern accounting. They developed bills of exchange, which were essentially early checks that allowed money to be transferred across long distances without physically moving gold. This was revolutionary. Why was this important for war? Imagine a king in England borrows money from a banker in Florence to fight France. Instead of transporting chests of gold across dangerous roads where they could be stolen, the banker in Florence writes a bill of exchange. The king takes this paper to a Medici branch in London, and they give him the gold there. It was fast, efficient, and relatively secure. The Medici made profits not just from interest on loans, but also from exchange rates and transaction fees. They financed wars, but they also financed peace. When wars ended, they funded reconstruction. They became so powerful that they essentially controlled the papacy and multiple European kingdoms. The Medici proved that whoever controls the money controls the power, and war was the biggest money-making opportunity of all. While the Medici dominated Italy, another banking dynasty rose in Germany, the Fugger family. Jakob Fugger, known as Jakob the Rich, became the wealthiest man of his time by financing wars and empires. His biggest client? Charles V, who wanted to become the Holy Roman Emperor. The election for Holy Roman Emperor wasn't decided by bloodline alone. It required the votes of 7 powerful electors, and votes could be bought. Charles needed an enormous amount of money to bribe these electors. Jakob Fugger lent him over 850,000 florins, an astronomical sum at the time. Charles won the election and became emperor, ruling over vast territories in Europe and the Americas. In return, Fugger gained control over silver and copper mines in Central Europe, monopoly rights over certain trade routes, and the power to collect taxes in some regions. He essentially became a shadow ruler. But the Fuggers also financed Charles's wars against France, the Ottoman Empire, and Protestant reformers. Every battle, every campaign required money, and the Fuggers provided it at high interest rates. They developed techniques like syndicated loans, where multiple bankers would share the risk of a large loan. This is still used today in modern banking. The Fuggers showed that banking wasn't just about storing money. It was about creating money through credit, leveraging that credit to finance massive projects like wars, and then profiting from the outcomes. War created demand, and banking supplied it. Now let's jump forward to 1694, a crucial year in banking history. England was at war with France in what was called the 9 Years' War. King William III desperately needed money to build a navy and pay his army, but the royal treasury was empty. The government had borrowed so much that nobody trusted them anymore. Merchants refused to lend because previous kings had simply seized their money or refused to pay debts. So a brilliant and controversial idea was proposed by a Scottish financier named William Paterson: create a new type of bank, one that would lend money to the government but would be owned by private investors. This bank would have special privileges, including the right to issue banknotes that could circulate as currency, in exchange for lending £1.2 million to the government at 8% interest. This bank would become the official banker of the nation. This was the birth of the Bank of England, the world's first modern central bank. It was essentially a deal between the government and private financiers. We'll give you money for war, and you'll give us the power to create money through banknotes. This was revolutionary because banknotes weren't backed by gold in the vault. They were backed by government debt. Think about that for a moment. The money in your pocket today ultimately originated from this concept. Currency backed not by gold, but by the government's promise to pay its debts, which came from war financing. The Bank of England proved so successful that it became the model for central banks around the world. The Federal Reserve in America, the European Central Bank, the Bank of Japan, all follow this same basic principle established in 1694 to finance a war. No discussion of war and banking is complete without mentioning the most famous banking dynasty of all, the Rothschild family. Mayer Amschel Rothschild started as a coin dealer in Frankfurt, Germany, in the 18th century. But he had a vision. He sent his 5 sons to 5 major European cities: Frankfurt, London, Paris, Vienna, and Naples. Each son established a banking house, and together they created the first truly international banking network. Their breakthrough came during the Napoleonic Wars in the early 19th century. Europe was engulfed in conflict as Napoleon Bonaparte tried to conquer the entire continent. All sides needed money. Britain needed to finance its navy and pay coalition allies. Austria and Prussia needed to rebuild their armies after defeats, and even Napoleon needed funds for his campaigns. The Rothschilds financed them all. But their genius wasn't just in lending money. It was in moving money faster than anyone else. They created a private courier network that was faster than official government communications. They used carrier pigeons, fast ships, and trusted agents to transmit information about battles, prices, and political developments. The most famous story, though probably exaggerated, is that Nathan Rothschild in London knew about Napoleon's defeat at Waterloo before the British government did. He allegedly used this information to make a fortune in the bond market. Whether this story is entirely true or not, the principle is accurate. The Rothschilds had better information than governments, and information is power. They pioneered the concept of government bonds as tradable securities. Instead of just lending directly to governments, they would help governments issue bonds that could be bought and sold by investors. This allowed governments to raise massive amounts of money quickly for war efforts. The Rothschilds would underwrite these bonds, guarantee them, and distribute them across their international network. They made profits from underwriting fees, interest, and trading. By the mid-19th century, it was said that there were only 5 great powers in Europe: Britain, France, Austria, Prussia, and the Rothschilds. They had become so powerful through war financing that they were effectively a power unto themselves. Wars made the Rothschilds, and the Rothschilds' financial innovations made modern bond markets possible. The First World War, from 1914 to 1918, was unlike any previous conflict. It was total war, involving entire populations and economies. The financial scale was unprecedented. Britain alone spent over $50 billion, equivalent to trillions today. How did countries pay for this? Through banking innovations that we still use today. Governments issued war bonds to their citizens, asking ordinary people to lend money to the government. Banks organized massive campaigns to sell these bonds. Propaganda posters everywhere urged people to buy bonds to support the troops. Banks also helped governments with short-term financing through treasury bills and credit arrangements. But the biggest innovation was that central banks essentially printed money by buying government debt. The Bank of England, the Federal Reserve, which had just been created in 1913, and other central banks bought government bonds and paid for them by creating new money. This allowed governments to spend far beyond their tax revenues. The result? Countries could sustain years of brutal warfare that would have been financially impossible in earlier eras. But there was a cost: inflation and massive debt. After the war, countries like Germany faced hyperinflation because they had printed too much money. The economic chaos of the 1920s and 1930s, including the Great Depression, was partly a consequence of the financial systems created to fund World War I. Modern central banking, deficit spending, and monetizing government debt, all these became standard practices because of the First World War. World War II, from 1939 to 1945, completed the transformation of banking into its modern form. The financial scale was even more enormous than World War I. The United States alone spent over $4 trillion in today's money. How was this financed? Through a combination of taxes, bonds, and monetary creation. The U.S. government sold war bonds to citizens in the most successful fundraising campaign in history. Banks were crucial intermediaries, organizing bond drives and providing credit facilities. But the most important development was the relationship between the Federal Reserve and the U.S. Treasury. The Fed agreed to buy unlimited amounts of government bonds at fixed low interest rates, essentially guaranteeing that the government could borrow as much as needed for the war effort. This was monetary financing of government debt on a massive scale. The money supply in the U.S. more than doubled during the war years. Interestingly, despite this massive monetary expansion, inflation was controlled through price controls, rationing, and the fact that consumer goods were scarce because factories were producing war materials. After the war, in 1944, the Bretton Woods Conference established a new global financial order with the U.S. dollar at its center, backed by gold, and the International Monetary Fund and World Bank were created. These institutions were designed to prevent the financial chaos that followed World War I and to facilitate reconstruction. Modern international finance, development banking, and the dollar-based global system all emerged from World War II financing. So, let's recap this incredible journey. Medieval kings needed money for wars and turned to merchant bankers, creating the first lending institutions. The Medici financed papal wars and invented modern accounting and international banking. The Fuggers financed emperors and developed syndicated loans and risk-sharing. The Bank of England was created specifically to finance war and established the model for central banks that issue currency based on government debt. The Rothschilds built an international banking empire by financing all sides of the Napoleonic Wars and created modern bond markets. World War I forced governments to innovate with war bonds, deficit spending, and central bank money creation. World War II completed the transformation with unlimited monetary financing and the creation of the modern international financial system. Every major innovation in banking, from bills of exchange to central banks, from government bonds to deficit financing, from international networks to monetary policy, was driven by the need to finance wars. This is the uncomfortable truth. Modern banking exists because wars required massive amounts of money that traditional taxation couldn't provide. Banks became powerful because they could create credit, move money across borders, and help governments spend beyond their means. Today, when you use a credit card, when governments issue bonds, when central banks adjust interest rates, when international payments flow instantly across borders, you're using systems that were created to pay for war. Wars didn't just shape political borders, they created the financial architecture of our modern world. Money, power, and history truly came together in the crucible of conflict, forging the banking system that governs our lives today. Thank you for watching. The Epoch Economics, where we explore how money, power, and history intersect. If you found this story fascinating, please like this video, share it with friends who love history and economics, and subscribe to the channel for more deep dives into the forces that shaped our financial world. In the comments, let me know. Do you think banking would have developed the same way without wars? Or was conflict essential to financial innovation? What topic should we explore next? The history of taxes? The rise and fall of empires through economics? Or something else? I'd love to hear your thoughts. Until next time, remember, understanding the past helps us navigate the present and prepare for the future. See you in the next video.